Bring that ass back like a boom, 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 boom.
Good morning, everyone. This is Supernova New with Boom Traders Weekly Overview for August 28th. Let's just get it going. Session overview. As usual, we have the risk vest model, which is a little bit longer term trading model, tactical trading environment, which pertains to our short term trading. We have the current markets and a summary. Now, our risk vest model as of today is on sell caution. That was actually as of Friday, it was on sell caution. And here are some of the components that have a stricter description. However, there are some more nuanced components that we're now listing here. Now let's just go over those. The general market is on neutral. It lost 1 point from being positive, so you can see the minus sign. Up, down, volume negative, lost 2 points, so it was on positive. New highs, new lows on negative from neutral. Stock participation negative from neutral. We would have had this risk vest model on sell signal general if the general market was negative, and the way the general market is going to go negative is if it undercuts the 50-day moving average, which it still hasn't done. But all other components as of Friday switched very negatively to the downside, so be very extremely careful, and I'll repeat this extreme carefulness a couple of times during this presentation. Now, the tactical trading environment has been on hard penny for a couple of days already. The breakouts are now working well, and the risk is high. Maximum caution is advised. You saw that most of the breakouts were squatting, failing to produce any meaningful results, not moving. And this should tell you even more than what Jerome Powell told you about the market, than what he told you about the economy, and what we have here as indicators. If your trades are not working, there's something wrong with the market, or of course, might be something wrong with the way that you're trading. But in general, if you're following the rules that we are preaching here, it should be working when the market is right. So, the next thing that I want to show you is the charts. We're going to go over each one of the three main markets so we can examine them and see where we can find some support. And then we're going to go into some more of the presentation, especially about what Jerome Powell had to say on Friday, which I think is important to go over so we understand his logic. So let's go onto the charts. Now this is my market view during regular hours. This is what I like to look at several times a day during the trading day. And let's start with the S&P 500. Guide you through some of the bars right here on the top. The first thing that is important to know, we had this sell signal right here. That's right the next day after the touch of the 200-day moving average. So it was a good idea to do some short selling or covering. Maybe you could have hedged. I personally played SARC, and then I also had the SQQQ to the upside, which is the short inverted triple leveraged QQQ index. Now, what is interesting to see right here is that up until Friday, as I said, even Thursday action looked pretty positive. We were able to almost fill the gap that was left behind between last Friday and Monday. So we gapped down on Monday, but then on Thursday we almost filled that gap, and it was actually looking quite positive. However, on Friday, Jerome Powell, as I said, gave a speech, and we have a couple of notes from the speech, so I'll talk about it in just a minute, that basically turned the market down. And you can see it happened on quite a lot of volume. Like volume, you can see right here, given the 20-day moving average, it's quite elevated, but right here in this little bar, I also have it as almost 170%, so 70% more than the regular. 100 is regular 20-day moving average volume. You can see the volume, the advancing volume, the decline volume was minus 13.57. Issues were minus 6.47 for every one. So there were 6.47 declining issues for every one issue. Net highs, net lows minus 72. Put call ratio still not as elevated as I wanted to see it. So that's another thing to our market model that suggesting that we're still not quite bearish. I mean, put call ratio needs to go a little bit up. Now, as far as just purely looking at the technicals, the most obvious resistance that is coming, or support in this case, the most obvious support line that is coming right here is the 50-day, which is the yellow line. I'm guessing that it will most probably, because it's a lagging, moving averages are lagging indicators, it will most probably rise a little bit more right here into the 400. So there you have it. You have the 400 century mark. You have the 50-day moving average. You also have some flipping right here from this small 3, 4, 5-day basing structure right here. You can use that as also, but it's also supporting the 400. And let me just drop Fibonacci retracement. I'm not quite sure. Okay, let me just put it this way. I'm not the biggest fan of Fibonacci. I mean, I just don't know. But 50% retracement, even if you're looking at it, it's going to come right at the 400. So 400 seems to be like an obvious place where we can try to search for support. I'm not saying we're going to get any support right there, because the things that Powell said made the market very bearish in terms of sentiment. But I'm just saying that from a purely technological base, looking at the charts, only if you don't read the news, don't care about the news, 400 is the place to look for some support. Now let's take it to NASDAQ and QQQ ETF. It's closer to the 50. There is your support zone of the same structure that we had in the S&P 500, but we already undercut it on Friday. So we're looking for the 50 in terms of Fibonacci. If you're a fan, they'll give you right here. We are right there. So I would say something in between probably, but 300 is also century mark. So 300, 305, looking this zone for some support. However, as you have seen the case with these breakdowns in the market, in most cases, growth stocks are the ones that are being sold. So I'm not going to be surprised if NASDAQ really undercuts that low. Let me just draw a trend line right here, see where potential intermediate support might come. So we're looking at, again, 300. So there are a couple of support lines right here that you can use, but don't play big if you're trying to play this as a sport. See if there's a reaction right here and then participate. Just one more thing to note here. Again, volume 150%, so 50% above the normal 20-day. Up-down volume, again, very negative. Advanced decline issues, minus 4.78 to 1. Net highs, net lows, you can see minus 136. So NASDAQ is definitely weaker than S&P 500 in that regard. You see 136 new highs, new lows to the minus compared to minus 72. And you can see IWM, basically the same story. Again, if you're looking for some support right here, again, the highs of this structure right here. So this is looking at the 183 zone. The 50-day moving average is coming up a little bit, so probably about the same. And if you're looking at Fibonacci, and somebody would say this is a cluster zone, probably they're right. I don't know. I don't like this, but it definitely looks at a 61.8 retracement right around here. So let's just clean this mess that I made. And you can see it right here. Right here is where your support should play, if it is to play. As far as the advanced decline issues on IWM, you can see minus 17.53 to 1. So for every one advancing issue, there was like 17.53 declining issues. Volume was not as elevated as in the S&P 500 and NASDAQ, but still not looking good. It was on volume, this break. Now, these are the charts. I know what Powell said, and you will see it in just a minute. I know that there has been some sentiment that the next hike might not be 75%, might be 75 points, I'm sorry, might not be 75 points, it will be 50 points. Clearly, he stated that it will be 75 points. But bear in mind that the market is a discounting mechanism, and all those things were sort of figured out. I don't think that the market is well, basically, let me put it this way. I think that the market overreacted on Friday. It was expecting something, it didn't happen, and that's the result of that. But I think that once people start to think about what Powell actually said, there's not really much of a change from what he has been saying so far. He said that, okay, let's talk about what he said in just a couple of minutes. Let me just finish with this and we'll go through the notes and see what Powell actually said. Last but not least, my oscillators right here. I have among three of them, and you'll see the spike breadth rest in just a couple of seconds on the presentation. They're all in their midsection, so nothing really extreme. This, as I said, there is some more room to the downside based on the oscillators, pretty much as the charts are showing. We have some room to go to the 50-day moving average. So pretty much everything is speaking the same language. Now, let's go back to the presentation and looking at the spike breadth thrust indicator. I said it's in the middle as well, so nothing really changes here. Now, to the Powell. And here are the key talking points from what he said on Friday. Now, the first thing that he mentioned, which was important and the market reacted to it, while higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. These are unfortunate costs of reducing inflation, but a failure to restore price stability would mean far greater pain. So this again reassures that the Fed are firm in their desire and their commitment to bring down inflation. And I don't really think that there has been much of a change in the tone that they have been using, except for the last paragraph right here. But while the lower inflation readings for July are welcome, a single month's improvement falls far short of what the committee will need to see before we are confident that inflation is moving down. Again, I don't think that everybody was expecting to have the rates just cut after a month. I mean, it's not how it works, and the Fed are not so short-eyed in order to just cut rates after 1 month of good data. They'll need more information, and Powell is just saying the same thing. I mean, he's just continuing this line of talking. Restoring price stability will likely require maintaining a restrictive policy stance for some time. Everybody knew that. Everybody was making plans of how the rate hikes will go for another 3, 4, 5 months. I don't think anything is surprising right here as well. Then that brings me to the third lesson. He also spoke about two lessons from previous economic situations like this one, which is that we must keep it until the job is done. History shows that the employment costs of bringing down inflation are likely to increase with delay as high inflation becomes more entrenched in wage and price setting. And here's the third thing, here's the last thing that basically put the nail in the coffin when everybody gets scared and the panic selling really started. We are talking forceful and rapid steps to moderate demand so that it comes into better alignment with supply and to keep inflation expectations anchored. We'll keep it until we are confident the job is done. And he said this job is done like 3 or 4 times. But again, he's using very strong words like forceful and rapid steps to moderate demand. However, it really doesn't stray too far away from what he's been saying so far. So this reaction to me is a little bit overheated. This is why I'm really interested to see how next week will go. And this underlying strength that the market has been showing in the couple of few days or weeks, if you want to say, with this rally to the 200-day moving average, I want to see if there is some strength right now in the sell-off. Some stocks have been setting up. Now, of course, with Friday, there are very few advancing stocks. There are very few stocks that remain untouched, but there are. And usually when they start selling growth stocks in the NASDAQ, they started, and by day, I mean big players, hedge funds, and so forth, they started going into defensive stocks, and they also started going into China. And you saw China since the beginning of this week with the big drop on Monday. China has been strong. There has been really, really, really significant volume coming into China. And then we got news on Friday, I think it was, that the United States government, the United States in terms of the exchanges and China have reached an agreement for audit of Chinese listed companies that it's far superior than any audit that they have been having so far. So it was a control issue. China doesn't want United States government, United States agencies basically auditing Chinese companies. But now there's been an agreement. So now that the United States market is weak due to the American economy and inflation, we are pouring money into China. So I've been talking about China, and defensive names. So we'll see. Again, during times like this, it's very important that we stop listening to news so much and actually look at the charts, look at what the stocks are telling us. Are we making money? How are stocks behaving? Are they under pressure? And we can answer for ourselves whether the market is going higher or it's going lower. These news, yep, they help it. But just so you know, we really want to be stressing on the charts, especially in times like this. Going forward, there's also this survey by Ned Davis Research about the inverted yield curves. And you can see every time the inverted yield curves go above 55, the chart uses a range of yield curve indicators from 3 months to 30 years. So these are a lot of correlations. It's not just one, it's a lot of. So every time it goes above 55, recession is likely, and below, recession is unlikely. And now we have this spike right here to 55. But I want to take away the conversation for recession because I think it's clear for people that are following more fundamental news that we are in a recession. No matter how we put it, no matter what we're thinking about it, we are in a recession. So this chart right here just reinforces that statement. As far as that, also go to the advisor perspective, WLI leading index growth. You can see it's right here. Current value is at minus 12.1. That's of August 19th. And as you know, this goes 1 week back. So data for this week will be out next week. Same thing here. This chart was also available in the review last week. You can see the current level right here, the weekly leading index year over year change. And only once in history there has been a recession that starts at a value lower than we have it right now. So right now we have it right here at about -6 or something, and only one time in history of 1970 recession started at -77.4%. But every single time before that we had recession starting higher than what we are right now. So again, just more clues that we have this recession. Cycle work for NASDAQ, we've been preaching on that for maybe 2 months now. Given the cycle works, we have another undercut of the lows right here in October, and then straight up moving. Now with what Powell said, we might move this a little bit forward to January, or at least the end of the year. But anyway, keep in mind, cycle work suggests there's going to be another undercut of NASDAQ lows. Not so much for the S&P 500, but again, this is based on precedents. It's not what, the future, nobody can tell you what was going to happen. This is the cycles, presidential cycles for the Dow Jones Index. The second year is, again, the weakest year. And right here in the very last quarter of the year, it seems like there's another low that we can make for the market and then shoot straight up, which also coincides with, as you can see right here, with the NASDAQ cycle work. So now let's move on to sentiment. And again, this is 1 week back. So this is the week ending on 24th of August. You can see bullishness started to drop. And I'm guessing this is what Friday's action 1 week before basically showed us. Looking at the charts, that was just before the big drop Monday. So bearishness started to creep in back again and moving higher. We've also had the 1 year bearish high this year on 27th of April. I was making the video then, I remember 59.4. We're far from it, but we're just, creeping higher again on the bearish sentiment. As far as CNN fear and greed index, we moved back into the fear category. Previous week was a neutral of 51. So we closed on 44. You can see right here how's the timeline developing. And Bitcoin and crypto in general, we have 28 out of 100, so still fearful. Still fearful mode. You can see right here we're forming sort of a bearish flag on Bitcoin. And in general, you know that crypto is suffering when the market money supply is short, and especially with the Fed's talk about trimming demands to match supply. We might be seeing more downside in crypto, but that's of course we'll see. Last but not least, the summary. Just go over the important things of this presentation once again. Risk vest, sell caution, setups. Very selective to none. I did some stock work, not finished yet, but I haven't found much really, to be honest with you. Friday, Saturday, I was scanning a couple hundred of charts. Not a lot to be very honest with you. The market's in downtrend. Put volume. This is the put call ratio. It's elevated, although it needs to go a little bit higher to really start being worrisome. Volatility again elevated. VIX as we speak stands at 25.56. It is elevated. It's above the 25 level, which is important to note, but I think that we need to see it a little bit more elevated, 28.30, to really be worried about the markets. And last but not least, there is a recession going on for sure. There's also the war between Russia and Ukraine, which is putting a lot of pressure on utility bills, therefore putting pressure on food supplies. It's just adding fuel to the fire, and it's making things looking very, very dull for Europe. So be very careful with your trading, and I hope this information will will prevent you from making hasty decisions and putting a lot of size on your trades. I hope you liked what you saw. Please like this video, subscribe to our channel right here, leave a comment. If you have any questions, please feel free to do so. We also have a Discord channel which is full of valuable information. A lot of very, very cool people out there trading pretty much every day. There is something to trade, that is for sure. We have a lot of information out there, so please head up, and I think you're going to find it very, very, very valuable for your trading decisions. So I hope to see you there. If not, I'll see you here next week, same time, and stay safe.